Hello guys, Brian here again from quantlabs.net. So today in this video, Sunday, I believe the 12th of September, we had a crash earlier this week, and I've talked to a lot of people about trying to put money into crypto, and a lot of them will tell you that they don't like volatility. It's just not a straight up return that they can just park money in, forget it, set and forget, and they'll get a return. One thing when it comes to crypto, and you net all the volatility out compared to all the mainstream assets, be it commodities like gold, oil, stock market, forex, crypto still will beat any of those asset classes by a long shot. You just do a comparison on a charting system and you'll see what I mean, especially when it comes to Bitcoin and Ethereum. Then there's other coins like Solana that will easily beat out Bitcoin alone or Cardano in the last few months. So as it stands right now, volatility is a good thing. When you look at, as I did a few days ago on Friday, you look at the intraday movements of the performing coins, even though it was quite negative, you would find that there are certain coins like Tezos and maybe Cosmos that moved up 5-10% swings. And if you know about them, you can make a lot of money by obviously scalping them. So volatility is a very good thing if you know how to play it and ride out that oscillation. The other thing is to hold out on the positions, as I said yesterday, longer than just 5-10 minutes or an hour, because if you know that they're getting the momentum, not long term, but over a couple of hours, even a couple of days, you can make quite a bit of money with the way I'm implementing this new strategy that I'm hoping to get done over the next few days. And they'll send out different types of signals via my server, which people can take advantage of in the client scripts that I have from the Python ones that I built a few weeks ago. So as it stands, you can do very well in crypto riding this type of oscillation or volatility and looking for those particular coins that perform. And again, it's 24/7 as well. And as I start to really dig the cloud technology, you can just put it up on a server somewhere virtually and have some money allocated to it and let it trade once it starts working. I do think for the next little while you'll see crypto most likely will probably kind of be range bound, just due to the fact that there's like talk of, again, regulation on stable coins and taxation and all kinds of rules which can suppress the performance of crypto overall. But as I said before, there are certain coins that will perform for a little while, like look at Algo, Tezos, Cosmos. They all of them this week, they were performing, but they'll drop back. So as it stands, people go, well, they're not real. They're not, well, gambling's not real, but people still do it. US dollar, you put money into a bank account and it's not physical. If you have $100,000 in your bank account and you want to withdraw all your money out of your bank account, $100,000, see what the bank will tell you. They need a couple of days to do it. Well, no different than crypto. It's called credit. And as long as people have confidence in that credit, it's going to be a valid asset. And crypto is the same way. I mean, it's one thing if you're trading on an unregulated exchange out of Asia, where you're working off of an exchange that's regulated, registered in the U.S. is different. And, this notion of it's not worth a lot, and that's a bunch of hooey, because it's based upon trust and confidence that if you put $100 into that exchange, and then it returns, let's say $10 next day, and you can withdraw all of it. Can you do it? Yes, as long as you have that trust in it, and that's how everything works in the world, especially in any economy or tokenomics or tokenomics as they call it. As long as you have confidence that you can exchange something and get something back without any scams, then chances are it's an asset. It's a security. So you can easily get around that and build up confidence around that. And again, volatility is just another great fixture. People are making a lot of money. I've got two people already that confirmed it earlier this week, where they made a boatload based off the volatility. If you don't know how, well, start learning. You can do very well in this, but there's a lot of people that will gladly do a job that they probably hate for fixed amount every week. And here, you just, as I said, build a little bot, get it working, and just set and forget and let it build your account for you. And that's about it. So volatility is a very good thing. You can play off those little intraday swings. As I said, I'm planning to build out a modified strategy built around that. And it can work in any environment, I think, if it's shorting or longing in momentum, very trending environments. I haven't lost any money with this crash because all that account is held in US dollar. So as long as US dollar doesn't crash, we're fine. And that's about it. And I just want to let you know I'll be talking about tomorrow, September 13th, about trailing stop losses, if they help or not, and what you can do about them. And I'll probably showcase some Python examples and get some people's opinion on it. Do the same thing using a platform, again, like as always, MotoWave. Other than that, we'll talk to you later, and keep your eye on the blog for all that stuff. If you're not, join the newsletter. All right, talk to you later.